Hello, everyone. Welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. And just to let everyone know, I have a lot to cover today. For those of you who are dropping off on YouTube, I'm going to go through this as quickly as possible today. I have a lot to cover. So here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also want to let everyone know that Bookmap is encouraging everyone to join Discord. You do need a Bookmap subscription to fully participate in Bookmap Discord chat and watch the streams of Bookmap Discord. There's a free subscription available. After that, you will need to verify your account. There are a lot of advantages to joining Bookmap Discord. Again, it can be free, and it is free, and there are a lot of advantages. So just take a little bit of extra effort to join Bookmap Discord and watch my stream on Bookmap Discord. Here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index. That's why I concentrate on levels for SPX and SPY. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. So again, I focus on NDX and QQQ levels. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in our process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis and for setups. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And here's my agenda for today, Wednesday, December 18th. First of all, I want to go over news items, economic data, and events for today, as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, time permitting. And then I'll take a look at the live market. And of course, today is FOMC day. The announcement comes out at 2 p.m. I'll stop whatever I'm doing at that time, and we'll take a look at the live market. So the announcement at 2 p.m. and the statement, and then the press conference at 2:30 p.m. as my webinar is wrapping up. All right, so let's take a closer look at that. The FOMC, and then I'll cover the other data, events, economic data coming up in the rest of the week. So this is the Fed Watch tool. Current target rate, this is the Fed funds rate, 454 to 475 basis points. And there's a 98.6 chance of a quarter point rate cut to 425 to 450. And that's a little bit less than it was on Monday when we took a look at this. All right, so that's FOMC 2 p.m. All right, coming up for the rest of the week. On Thursday, GDP data comes out at 8:30 a.m. Eastern Time. Friday, PCE data could be a market mover, 8:30 a.m. Eastern Time. And then, of course, Friday is the big options expiration for December. This is the monthly options expiration for December. And what this chart is showing is market maker's delta notional on the vertical axis, expiration date on the horizontal axis for the S&P 500, NASDAQ, and Russell 2000. Orange bars are showing positive gamma or call gamma, and blue bars are showing negative gamma or put gamma. This is the December options expiration. Spotgamma is calling that the largest expiration ever. You can see it is heavily call dominated. So that means that these calls, positive gamma, that has been supporting the market in a narrow range, or a lot of that is set to expire on Friday, could lead to more volatility and wider trading ranges after the expiration. All right, so that's the big options expiration coming up. Hello, Stephen. Welcome. Glad you're here as well. And hello, Gray. Welcome. Glad you're here. All right, so that is the news for the week. FOMC today, wrapping up with options expiration on Friday. All right, let's move on to positional analysis now. I'm going to start with the S&P 500. This is the ES Futures and Bookmap. Note I am using the H contract, the March contract. Also using Bookmap data, very pleased with Bookmap data. It loads very fast, have not had any latency issues. So again, Bookmap data is what I'm using. I'm very happy with it. All right, again, this is ES Futures and Bookmap, and I will tell you, I have never seen a pattern like this very symmetrical V pattern, just amazing. Also, I'm not sure what caused this drop at 8:30 a.m. Eastern Time. Housing starts data did come out 8:30 a.m. Eastern Time, and that was less than expected, less than the previous number. And I can't imagine that caused that large drop, but that was the only information, the news item that I saw that could have led to that drop. We'll take a closer look at this setup in just a few minutes, setups in the S&P 500. So with that, let's move on to positional analysis. Let's take a look at a higher time frame. I'm going to go to SPX, the underlying index. This is a one-day chart, 1 year's worth of data. Rally continues. This is, again, a one-day, 1 year chart in Thinkorswim. Rally continues. Let's take a look now at a 30-day, 1 hour chart in Thinkorswim. Let me point out a couple of key events and turning points. There's the post-options election rally and pull back to 58.50, supported that level, and then a rally up to the 6,100 call wall, and then consolidation after that. So that 6,100 call wall did act as resistance, and if price does move higher, that is certainly the next target and range up above. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. These levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move. Again, based on the options market, both of these levels come directly from an options chain in Thinkorswim. This is the standard expected move that most people look at. Stephen did ask about this earlier. This information is based on an equation that I posted or something similar. All right, so SPX trading really right in the middle of the range for both the weekly expected move and the daily expected move. And note the daily expected move was a little bit larger than recent expected moves due to the FOMC today. So it was plus or minus 40 points. So again, the daily expected move did widen out a bit. All right, let's take a look at the other levels on this chart. The dark red lines are spot gamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. They're available on a variety of trading platforms. And again, this is Thinkorswim, 30-day 1-hour chart. Very easy to get these levels on Thinkorswim. There's the put wall, 5,900. That's a strike with largest net negative gamma that can be expected to act as support. That level did move lower from yesterday. Next level up above is the absolute gamma strike, the L1 level there at 6,000. That's a strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. That level also moved lower from yesterday. And above that is the volatility trigger at 6040. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And note, SPX is trading above that level in positive gamma. More about that in just a minute. That level also moved lower from yesterday, so a bearish hat trick for SPX today. Volatility trigger, put wall, and absolute gamma strike all move lower. Finally, the call wall remains at 6,100. That's a strike with large net positive gamma that can be expected to act as resistance. All right, let's wrap up our view of SPX with a 1-minute chart. And I'm going to zoom in on this just a little bit. All right, so this is showing 2 days worth of data, regular trading hours in the dark shaded portions. Here's that volatility trigger, 6040, and price did reverse higher just above that level. So that was the key SPX level in play for today. The volatility trigger, SPX is trading above that level. All right, now to Bookmap. All right, levels in play. Just below, here's the volatility trigger at 6040. And that's the SPX volatility trigger. Note there's a big difference in price between SPX and ES. Earlier today, that difference was about 77 points, and I've left it at 77. So that 6040 volatility trigger is shown at ES 6117. And Stephen had asked about this earlier. For ES and NQ, I use price lines. I like to show my own levels. I have more control over the levels that are shown. I take the SPX and SPY levels from the Spotgamma website, and I enter them in a spreadsheet, and I can show the equivalent levels for SPY and SPX on my ES chart with the index relationships that I calculate. Now, I do use Spotgamma levels for SPY and QQQ. So here's SPY. So I use the Spotgamma cloud notes for SPY and QQQ since there's no index relationship, no translation involved. So I do use the Spotgamma. All right, Stephen asked on rollover, how does it work with Spotgamma in terms of the call wall? So that is all handled by the index relationships, which change quite a bit. So if you go look at my index relationships for this week compared with last week, you will see a huge difference. So today, ES minus SPX Right now, it is closer to 75. Earlier today, it was 77. So that's for today. And last Friday, ES to SPX was around 5 or 6. And that was with the December, the Z contract. So with rollover, I just make the difference. So the call wall remains the same. The call wall is at SPX 6100 last week, this week, until it changes, it's at 6100. So that's one reason why I say ES, the ES futures contract, is a derivative of SPX. SPX remains at the same level. So those the SPX 6100 call wall has nothing to do with ES. So the only thing that changes is the new contract. The old contract expires on Friday, and the index relationships widen out on that rollover. And then as the next rollover approaches, those index relationships will gradually trend down to 0 again. So that ES to SPX offset will gradually move down to 0 if you held the current H contract all the way to expiration. All right, Stephen, I hope that helps. So the thing that remains stable is SPX and SPY, and the only thing that changes is the new contract, and that those offsets and index relationships will change at rollover, and they change every day. They will be different next week. All right, so let's move on. Again, shifts and levels for SPX, bearish hat trick, and for SPY, volatility trigger, absolute gamma strike, also shifted lower. Very interesting pattern. And this was the high of the morning acting as resistance. And that was just below the Spotgamma implied move high, which is based on a different calculation than the expected moves that I show. All right, let's take a look at NASDAQ. And by the way, for NASDAQ, there were no shifts in levels. So all the key daily levels remain the same, no changes from yesterday. And the pattern not nearly as interesting. So again, this is NQ Futures and Bookmap. Let's take a quick look at the underlying index charts. I'm going to go to, first of all, QQQ. This is a combo level up above. 537.66, combo 3. Acted as resistance before the cash open. Here's the volatility trigger. 534. Again, no change from yesterday. And 535 is the absolute gamma strike. That's QQQ. Let's take a look at NDX. So here's the volatility trigger, the 534 volatility trigger, 535 absolute gamma strike. Around that level, acting as support. Stephen, I understand. So I hope what I said makes sense. So remember, SPX, SPY, QQQ, NDX, those are the underlyings. ES and NQ are derivatives that change every month, every quarter, every rollover. All right, so those are the QQQ levels. And again, to avoid confusion, I take things into my own hands and use this price lines add-on to make sure I have the right levels at the correct equivalent levels on the ES and NQ chart. All right, let's take a look at NDX. Levels in play. right around this 21,900 level, acting as support. And now here's the call wall, absolute gamma strike at 22,000, and that level seems to be acting as resistance right now. All right, back to Bookmap. All right, so it looks like I don't have that 21,900 level on my chart. I'll have to check my spreadsheet. And let me do that. All right, for some reason I don't have that on my spreadsheet. All right, so let's move on. Again, no shifts in levels. Let's take a look at gamma, and that'll then take a look at some setups if we have time. Gamma notional at the beginning of the day, still positive for S&P 500 and NASDAQ, but lower than yesterday, still positive, and then negative for the Russell 2000. All right, so let's take a current look at, this is market makers gamma notional at the beginning of the day. Now let's take a look at a current view of gamma. This is the trace gamma heat map. The blue shaded area is showing positive gamma. So with positive, this means this is market maker's position, positive gamma, and positive gamma, market traders are short calls, market makers are long calls, hence the positive gamma. They have to trade against price. That tends to be sticky. Note the highest gamma, this is gamma exposure over on the left. Highest gamma strike by far is the 6,055. Again, that's the JP Morgan short call and the JP Morgan caller that expires at the end of the month. So that expires on December 31st. So that will remain in place after the December 20 expiration this Friday. So you can see all the positive gamma here, helping to keep price contained. A little bit of negative gamma down below. All right, so that's the current view of gamma. Stability index, just a little bit below 50%, indicating potential for moderate volatility. And of course, expect higher volatility in 8 minutes. All right, let's take a quick look at some setups, and then we'll get to the live market. I do want to cover the S&P 500. All right, so I'm going to skip over all the explanation, and I assume everyone knows what this chart is. This is the index hero signal. White line is price for SPX. Orange line is for calls, blue line for puts, and the directional line indicates the options delta. So a rising orange line, for example, indicates traders are buying calls, market makers are selling calls. Now there's another signal that we can take a look at. So that's the S&P 500 index signal. This is the equity signal. Both very similar signals today. Traders buying calls up until about 10:50. Let's go to full screen. I thought the index signal was a little bit, reacted a little bit quicker today. Let's zoom in on this. So you can see just a few minutes, just a couple of minutes after the cash open, traders started buying calls, index calls, SPX, SPY, ES, XSP, up until about 10:50. Very nice call peak reversal pattern accompanied by a flow alert signaling significant options activity and also a potential reversal in hedging flow, and that's exactly what happened. All right, so this is only showing regular trading hours, so starting at 9:30 a.m. Eastern Time. And let's go to Bookmap now, go back to the S&P 500. Zoom in a little bit. So that's showing this activity right here, starting. That's the cash open 9:30 a.m. Eastern Time. Looking in Bookmap, you can see the green volume dots. A lot of aggressive buyers are coming in. Small magenta volume dots. Sellers are exhausted. Cumulative volume delta starts to rise. A few minutes later, buy stop orders help to fuel that move higher up to the 8:30 high and just below that Spotgamma implied move high. And then consolidation after that. And remember that call peak pattern that came in right at 1050, and that was a good reversal signal lower. And you can see all the magenta volume dots. A lot of aggressive sellers coming in. And a sharp drop in cumulative volume delta. All right, so nice bullish setup at the open driven by call buyers. And back to Hero. Call peak pattern and price reverses lower, then traders start buying calls again. Also selling puts. Let's take a quick look at the equities. Similar pattern. The call buyers came in just a few minutes later. And another peak pattern. Start buying calls again. Took the foot off the gas. Now price consolidating. Let's take a quick look at NASDAQ. So here's the NASDAQ index signal, NDX and QQQ. In this case, traders were selling puts, shown by the rising, sorry, I keep grabbing the wrong tool, shown by the rising blue line. Also buying calls. Take the foot off the gas. Price consolidates. Let's check Mag 7. This is somewhat equivalent to the S&P equity signal and showing calls and puts for the Mag 7 stocks. Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. Call buyers. Let's go back to Bookmap, take a look at NQ. Zoom in on this just a little bit. 9:30. Another V pattern. Price reverses above the QQQ. 534 volatility trigger. Actually, let me zoom out on this just a little bit. One additional clue here in Bookmap. This is showing that large traders were buying that move down with iceberg orders. Large traders fading the move, buying weakness. And then as price reverses higher, as traders are buying calls in the index products as well as Mag 7 stocks, price started to move higher, cumulative volume delta rises, buy stop orders help to fuel the move higher, and finds resistance at 22,350. Now it looks like NQ is making a series of lower highs, trading below that 22,000 absolute gamma strike call wall. All right, I've got about a minute left before the FOMC announcement and the statement, so we'll hold it here. I do have some stocks to take a look at if there is some time, maybe in the last 10 minutes or so, 10, 15 minutes. So we'll focus on the live market here. And I'm going to take a look at a news feed over here. All right, 10 seconds. All right, so it looks like they did cut. Quarter point. And applying only 50 basis points of rate cuts in 2025. Another 50 basis points in 2026. I think the market was expecting more, so they did what I guess a lot of news outlets were talking about so far, a hawkish cut with a cut and then maybe a hawkish statement. So right now, SPX down to the 60-40 volatility trigger. All right, let's see how options traders are reacting. Go back to Hero. Go back to the S&P 500 index signal. I'm going to shift over to total signal. I may have to jump back. Zoom in a bit. And what I'm going to do, so I don't have to keep zooming on each chart, I'm going to open up another window. So this is the index signal. Let's go to the equity signal. Full screen, equities. Go back to the index signal. All right, so initial reaction, negative delta. Flow alert comes in. Signaling significant options activity, potential reversal in hedging flow. Looks like that may have been temporary. Check equities. Back to Bookmap. So interesting. At least according to the levels that I have, support at 60-40. Resistance at 60-50. Those are SPX levels. Let's check the SPX chart and see if that's correct. So not quite. I do need to update my levels. I'm going to go ahead and do that right now. So I'm going to call it 75. So I'm just updating my spreadsheet. Let's go ahead and refresh those levels. These will automatically refresh, but I want to do it right now. Go to price lines, reload levels. All right. So actually, the S&P 500 is still right now above the volatility trigger at 60.40. Oops. All right, Hero starting to move lower for the index as well as equities. So we'll see if the volatility trigger holds. Nope. Price breaking below the SPX volatility trigger. And the SPY volatility trigger next in line at 602. So now shifting into negative gamma. Let's take a look at trace. Let's go to delta pressure. And Neo had asked about this before. I meant to show this earlier. Let's take a quick look back in time. We'll go back to 9:30. Let's go back to 9:40. So as you can see, this reversal that I talked about this morning near the hedge wall, a volatility trigger, as SPX moved down into this blue buying support zone. Move up to right around 11, that reversal, moving up toward the red selling pressure zone. Now let's go to real time. So you can see that selling pressure building as Hero starts to move lower. That's the purple line. Let's check gamma. All right, as price moves further down, the influence of the 60.55 strike will start to diminish. SPX moving from the Spotgamma implied move high down toward the Spotgamma implied move low. And again, those levels are calculated differently, proprietary to Spotgamma, than the expected moves that I post. All right, back to Hero. Hedging flow continues to be negative for both the index and equities. Back to Bookmap. So now price is broken through the 60.40 volatility trigger and also the SPY 602 volatility trigger. Just looking at the next levels below. All right, so big levels down below. Here's the SPY 600 absolute gamma strike put wall. And below that, the 6,000 SPX 6,000 absolute gamma strike. And that was the lowest support level noted in the Spotgamma AM Founders Note. So if you are trading this, nice pullback for a short, shift in green dots to magenta dots, right around 60.50. A little bit of consolidation here, right around the 602 level. Pullback entries for short. Cumulative volume delta stops continue to fall. Sell stop orders helping to fuel that move lower. Now down toward the ES, lower daily expected move. Let's check trace. See what that looks like. Go to Gamma first. And note this information only updates every 10 minutes. So I've got 211, so we'll wait another couple of minutes. Check delta pressure. So according to this now, this SPX may be approaching some positive gamma, a buying support down below, positive buying support blue zone. All right, let's check Hero, see what options traders are doing. Now this is real time. So it looks like for the index, there is some bullish hedging flow coming in, positive delta. Check equities. And that is still moving straight down. Let's check one other. Let's check NASDAQ. Go to full screen. Check the index signal for NASDAQ. Also maybe slowing down just a little bit. Check Mag 7. All right, any questions, comments? Does anyone have anything they want me to take a look at? Let's run through some of the Mag 7 stocks real quick. Apple, still looking pretty strong. Amazon, dropped below the 230 key gamma strike. And we'll run through Bookmap as well. Google, holding pretty steady above the day's lows. Meta, not too bad either, finding support at the 620 key gamma strike. Microsoft, Nvidia caught a bid today. Call buyers driving Nvidia higher. Tesla, nice reversal pattern at 1150. Right when the index is reversed lower. Let's go Back to mag 7, check. SP 500, so reversing higher, slowing now. So it looks like the S&P 500 may have found support at the Spotgamma implied one-day move low. So again, from the one-day improved high to the low. Back to Bookmap. Let's run through some stocks real quick. Apple. Still above the opening print. That large magenta volume dot. Over on the left, Amazon. Trading below the opening print, below the 230 level. Broadcom, bearish day in Broadcom. Check Meta. Meta back down to the 620 key gamma strike. Microsoft now below the opening print. NVIDIA back down just around the opening print that was right around 133.80. Tesla. So it looks like the March to 500 has been a little bit interrupted today. Remember that call peak pattern right around 1150 as and helping to drive the indexes lower. All right, the S&P 500 continues to move lower. Finding support, at least temporarily, at the SPY 600 absolute gamma strike, put wall. Next strike down, 6,000 absolute gamma strike support level. Break below that, it could be lookout below. Let's check one thing. I'm going to go back to market overview. Close this. Let's go to the absolute gamma. Go back to full screen. This is the 6,000 strike right here. So next support levels down below that, much less substantial, 59.50, and the put wall at 5,900. And I believe 6,000 is Spotgamma's line in the sand for risk off. So so far, no consequential support below, even at 59.50 and 5,900, compared to the strikes above from 6,000 to 6,150. Equity signal, the index signal has slowed down a bit, but the equity signal continues to move lower. That's for S&P 500. Back to Bookmap. All right, questions, comments? Anyone have any stocks they want me to take a look at? Let's check NASDAQ. All right, so NASDAQ sliced right through the QQQ 534 volatility trigger right after the announcement. Finding support around the NQ lower daily expected move, and then the QQQ 530 zero gamma 5 support level just below that. And Kenobi asked about Intel. Yeah, we can take a look at Intel. Let's go to this hero signal. Options contact. The options are pretty low. Options volume, options delta notional, and Intel typically pretty low. So Intel's trading slightly lower. Notional value here is only minus 2.25 million. Compare that with a stock like Nvidia at 544 million, or Tesla 180 million. All right, so Mag 7 looks like maybe reversing higher. And Kenobi asked, what happened to that flow alert? I guess you mean Intel. Let's go back to that. Oh, that's interesting. Thanks for pointing that out. Signaling significant options activity. There were a couple of, looks like several large block orders, those vertical or close to vertical lines. After that, significant options activity and a sharp reversal in hedging flow. Didn't seem to have much of an impact on the stock price. Maybe 10, 15 cents or so. So interesting hedging flow, but not much impact on price. Back to Mag 7. S&P 500. All right, so the index signal now looks like traders are buying the dip. Again, right around the Spotgamma implied one-day move low. Check equities. And Kenobi asked, can that be interpreted as interest for future movements? All right, let me open this. Let's go open up a new Hero screen. Go back to Intel. All right, so one way to tell if that is, that would just apply to today or this week, is to turn on next expiry. So the all trades, that's all expirations, is shown with the purple line, and the teal line is showing next expiry. And for stocks, for Intel, that would be this Friday. So what this indicates is most of this activity, although very small, was in options that expire further out than this Friday. So I would interpret that as bullish, yes. Net for the day, it is still negative, but there were some longer term bullish delta notional hedging flow coming in, options trades right around 10:30. So yeah, I would interpret that as bullish for future movements potentially. When you compare the all expirations versus this Friday. All right, back to S&P 500 index signal starting to shift higher. Equity signal leveling off. And you're welcome, Kenobi. All right, so that seems to be good enough for a reversal higher. Check Mag 7. Also slowing down. Check NASDAQ. Slowing down. Back to Bookmap. So NASDAQ looks like it has found support somewhere around the lower daily expected move. That's that light blue line. S&P 500. Also trying to recover now. Note large traders were fading the move down with iceberg orders. So they were buying weakness, pretty typical behavior. Looks like they may be rewarded now. Let's recenter. And Filippo is asking about Bitcoin. I don't have Bitcoin futures loaded in Bookmap right now. Let's take a look at, we can go to Hero. Turn that off. And let's, we can take a look for one of the Bitcoin ETFs. Pretty choppy today. And it looks like I'm looking at another screen. Bitcoin futures are down pretty substantially today. And Coinbase and MicroStrategy, along with along with Bitcoin, down for the day. Index signal turning lower again. Equity signal also turning lower. Back to Bookmap. Starting to move lower. Now down to that 6,000 level, that line in the sand. All right, last call for questions, stocks. All right, so remember, coming up this week, GDP tomorrow, PCE data on Friday, and then again, the large call-dominated options expiration. Next week could be interesting, especially given this move today. All right, everyone, I want to thank you for watching. Thank you for your questions and comments. Have a great afternoon, and I will, press conference is beginning now, so I'm going to wrap it up. Have a great afternoon, and I will see you on Monday. Thanks again. Bye.